So the consumer price index rose 3.8% in the 12 months to December, up from a 3.4% rise in the 12 months to November. The largest contributors to annual inflation over the 12 months were housing, food and non-alcoholic beverages, recreation and culture. In the month of December, the CPI rose 0.2% in seasonally adjusted terms, and the very crucial number that the RBA looks at, the trimmed mean inflation, was 3.3% in the 12 months to December, up from 3.2% in the 12 months to November. Now, this is the monthly reading. Obviously, the RBA is tasked with keeping the inflation numbers between 2 and 3%. And it last cut interest rates back in August last year to 3.6%. Ahead of the data that has just dropped, markets were anticipating a more likely chance that the interest rates will go up next Tuesday than not. There's about a 60% chance priced in. We will have to reassess that now that this data is out. But certainly inflation has picked up at the end of last year, that is for certain, and that trimmed mean figure at 3.3% is certainly outside of the RBA's target band. Well, let's bring in AMP's Deputy Chief Economist, Diana Mousina, who is standing by and will be having as quick a look at these numbers as I am. But Diana Mousina, what do you make of them just as you glance down at the screen?
Well, the numbers are more complicated than ever because we basically have multiple readings on inflation now. We have the old quarterly data where everything was surveyed, once a quarter, and that's what we were used to. But now we have the new monthly figures where most things are surveyed every month. And then we have the old monthly data where about 60% of the basket was surveyed every month. So actually, when I look at my Bloomberg screen, I can't even see some of the full quarterly figures at the moment because obviously everyone's trying to figure it out at the same time. But look, I think the key thing here is that the trim mean came out on expectations that economists had. That was 3.3% over the year. The trim mean is what the RBA is really focusing on. And now I can see that the quarterly number for the trim mean was 0.9% over the quarter. We were looking for 0.8. I think 0.9 probably gets us to a rate hike in February because it's just too much above where the RBA was forecasting inflation to be when they last made their forecasts in November. And clearly we've seen this pickup in inflation in the 6 months from the second half of June last year. And I think that the RBA would just be too uncomfortable with that, given that the employment situation, according to the data last week, also looks pretty solid.
Yeah, you're right. There is a jumble of numbers on the screen, and I read out the monthly numbers, but as we look at those quarterly numbers, they have come in ahead of expectations, as you say, that trimmed mean at 0.9%, which takes the annual trimmed mean rate to 3.4%. So on any measure, the inflation picture is certainly hotter than the RBA would like. Is that a fair assessment? And given that, I mean, the RBA last cut interest rates. It was only sort of 5 or 6 months ago, back in August. It might have to hike now.
I know, it seems a bit crazy, doesn't it, that we've gone from talking about rate cuts to rate hikes in such a short period of time. And even the economists are confused. Some are still saying, well, we may get rate cuts, and some are saying we're going to get a few rate hikes this year. I think this basically just shows how fluid the environment is at the moment in terms of the economic environment and how data dependent most central banks are. What we've seen around the world is a bit of a tick up to inflation in 2025, and Australia was not immune from that. And I think in Australia, we also have, on top of the global inflationary challenges, we also have some domestic issues, for example, related to very high rents and new dwelling construction costs, which is basically a proxy for the cost to renovate and the cost to build. We don't include mortgage costs in the CPI, but we include the cost of construction. We're obviously seeing this tick up in electricity price as well, given that the rebates have fallen off. So the domestic challenges plus some global inflation that related to things like high food prices, for example, high energy prices, it's pushed a lot of countries to have higher inflation. I don't think it's necessarily bad that the RBA cut rates in August last year. I think it was necessary at that time to support the labour market. And if we didn't have those rate cuts last year, then we probably wouldn't have had the recovery to consumer growth that we've had, or to the private sector. You know, we've had pretty good outcomes in private business investment. We've had a tick up in residential construction. That's all really important. I think it's just the tick up has occurred a bit quicker than most people were expecting it to.
So do you think there's a credibility issue here for the RBA if it cuts in August and hikes in February?
I don't think it is, because the RBA was using the data that it had at the time to make its assessments when it was cutting interest rates in 2025. And it's very hard to know what the counterfactual would have been if we didn't have those rate cuts last year, or the last rate cut in August. What would the economic environment look like now? Would the unemployment rate be closer to 5%? We don't know. So I think it's very, I don't think it's fair to judge the RBA for having to shift to rate hikes just only a few months after cutting rates. And I think what we may see is actually an environment where it's sort of like a one and done rate hike, and maybe we don't need any more from here. Maybe we just need to recalibrate policy a little bit to get interest rates a bit higher for inflation to settle at a level where the central bank is a bit more comfortable.
And I mean, you mentioned geopolitical factors, external factors, and the currency is responding to those. The Australian dollar is now pushing up again above 70 US cents. What would the RBA be looking at when it comes to currency, particularly given Australia is such a trade-exposed economy?
Well, the higher currency means that actually imported inflation is going to soften a little bit. That would be good news for the inflation picture overall. I mean, of course, the geopolitical stuff matters for financial market sentiment, and global trade. But what the RBA really has to focus on is its dual mandate: full employment, price stability. And that price stability goal is not really being met right now, and that's going to be its key focus, abstaining from all the geopolitical mess that we have right now, because despite the fact that we have all this noise coming from the US and Trump administration, it's not really causing too much negative downside to global trade at the moment, or to global financial market sentiment. It's more just political noise, and it is affecting things that are happening in the US in terms of consumer confidence, but it's not really affecting Australia. We are shielded from that, and global trade has not collapsed. That's what's important for Australia. And what's the most important for the RBA is its goal of getting inflation to 2.5%, and it's just not there.
So just recapping that, inflation has picked up, and you now think that it is very likely that the RBA will hike rates next week, and the outlook from there?
I do think that there's a good chance that we get a rate hike next week. I'm just looking at the market pricing. It looks like, markets are still about 50% priced for a rate hike next week. I mean, our view was that we wouldn't see rate hikes this year. So I do think that this may be, like I said before, a one and done. Maybe we just get one hike. Our view on inflation is still that it's going to soften a little bit from here. When we look at forward-looking PMIs, the price surveys, we look at wage indicators, they're not really indicating upside growth to prices from here. I do find it hard to sort of argue for an increased inflationary outlook. Yes, there are parts of inflation that are problematic, like housing related areas, but broadly speaking, we have seen this tick down in price growth. I think that that's important. And without that renewed increase to inflation, I don't think the RBA will need to hike rates multiple times. I think we may get one in the next few months, maybe next week. And then I think rates will be on hold for quite a long period of time in Australia.